Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So listen, markets are lower today. We saw a Truth Social post last night that kind of said, Iranians in Tehran should evacuate, and that sent the markets lower because it might have signaled maybe more bombing campaigns and escalation on Tehran there. So we'll have to see again where we go from here, but the futures did sell off in the overnight on the back of that. Now, a couple other things here. We did get retail sales out. Retail sales coming in worse than expected, minus 0.9% versus minus 0.5% expected. But really the core retail sales, and you'll notice I show core up there on the bottom of the screen. The reason why core is minus food and energy. So really, again, people can say, oh, food and energy, people go here, they go there, whatever it is, prices go up, prices go down. But core is other things, right? It's everything else besides food and energy. And you can see we were expecting a plus 0.2%, and we got a minus 0.3. So for me, this continues to show that the consumer is slowing. So whether you think we're going into a recession or not, there's little doubt in my mind that the labor market is weakening slowly, and the consumer spending is weakening as well. And again, whether it's just an economic slowdown or an actual recession, we'll know later this year. But again, for me, I do believe eventually we will see a recession either later this year or early in 2026. All right, so let's jump right into the charts here this morning. Let's flip over to those. This is the S&P futures. So you can see last night, really, this is where that Truth Social post came out, and you can see the futures rolling over and coming down, and that was the majority of the down move. In the overnight, we really just chopped sideways. This morning, we saw a little bit of buy the dippers, and then the retail sales kind of brought us back in just a little bit. Now, listen, the markets aren't down massively. I mean, let's be clear on that. We're only down about 1/3% to 0.5% on the S&P and NASDAQ. But this is what's catching my eye. If we flip over to the S&P daily chart, this is something that I'm very, very keen on. Now, we discussed it in yesterday's game plan. You have this wedge pattern. Now, this again is what we would refer to in technical analysis as a bearish wedge pattern. And what we can clearly see is we broke down below here on Friday. Notice how yesterday we rallied higher. We went all the way up. And look, we kissed the underbelly of the wedge pattern right here. But then it got rejected and came back in. And we're setting up to open basically down here today. Now, for me, I'm big on basically prove to me that something is broken or recaptured, and then I believe it. In other words, we've broken the wedge pattern very, very clearly here. And unless it recaptures, I have to stay on high alert that we have a potential breakdown in play here. Okay, now listen, if it recaptures, then as a technical trader, you focus on the charts, and the charts have recaptured support, right? So it's a very simple black or white. It either recaptures it or it doesn't. And in this case, we did not recapture it yesterday, and ultimately we closed here, and today we're trading lower. So the wedge pattern break is a bearish break, and we're still below that end. We are in the midst of our cycle period here, which again is a change in psychology in the market that tends to change the direction of the market. And so in other words, we've been grinding higher now since early April. Is this the beginning, what we're seeing here, of the change in direction? And listen, we could chop sideways, but as long as we don't recapture that, even if we go a little bit higher but stay underneath, is this the beginning of a change in psychology that can lead us to the downside? Same thing on the QQQ. Here's your classic wedge pattern, connecting lows going back to mid to late April, the highs going back to May. And you can see we broke it on Friday and bounced yesterday, but we're still not recapturing this zone here. For us to reestablish a bullish bias, technically speaking, you have to get back above this area here on the QQQ. All right, so that's a little synopsis there, folks. And listen, we are very close to our all-time highs. There's no denying that. But what's interesting here is that the all-time high is basically right at those two lines as well. So it's all one and the same. this is now becoming one huge area of resistance that if we can get above it, sure, markets could continue to rally and maybe go up another multiple percentage points, maybe even more. But right now, you can't assume that. And technical traders that assume things are really not technical traders. They have to follow the charts, aka probabilities. All right, the dollar today is not doing anything. We're still remaining below support here, so the dollar remains in weak position. The 10-year yield pulling back just a little bit after the last 2 days of rallying. And now let's turn our attention to stocks that are in motion today. The first one is Solar Edge. Now listen, all the solar stocks are getting hammered because the Senate released their revisions to the big, beautiful bill, the taxing and spending bill that Trump is championing. And it had obviously cuts to solar incentives. And so really this morning, there's not a lot of other stocks that are making major, big percentage moves. And when I say major, I'm talking 10, 20, 30% moves pre-market. But the solar stocks are, there's no doubt about it. And so looking at this as a day trader, my first inkling is to say, okay, Solar Edge is down about 30% or so. Where is the trading opportunity? And you can see where it's trading pre-market. It's pretty obvious here. Right down here would be your first major zone of support. And I'll put a trend line right there, right? So we can clearly see pivot low to pivot low right there. That would be a support level for a day trade. Now, I don't like it as a swing trade. Swing trade, maybe if we got down to this gap fill here. But as a day trade, sure. If we came straight down from the current $16.10 level down into this level around $14.35 to $14.40, you would expect some sort of reflex bounce off that level. Now, the next level beyond that, let's just say this keeps dropping. Now you get into gap fill right here, and you have all this support right in here and in that vicinity. But right now, this is the one I'm focusing on. We would still have to drop, honestly, about a buck 70 or so to get into that level. First Solar is another solar stock getting hammered. Really, in terms of a technical level, this is where we start to look and say, okay, well, where is our next support level? And really what I'm seeing, there's a little bit of a level at 130.75. Now, this is kind of more of a hidden level. Most people will not see this one, but what I see is I see the movement up, down, up here, down, and then the breakout. And so for me, I say, okay, right here, there should be some levels. Now, again, not a swing trading level, day trading only, but basically 130.75 to 130.80, that level could be, and I say could because I can't guarantee during the action in the day that I'll take it, but this would be a level that I would see. Following that, there'll be an additional level right down here at 125.70, and then eventually this double bottom at around 120.5. But yeah, what a move down here on these solar stocks, folks. End phase is another one. This one's an interesting trend line, down sloping trend line. Look at how every time it hits, you get a big bounce, and big bounce. So in theory, remember us technical traders, we don't reinvent the wheel. We look at what historically has worked. If it has worked, every time, for instance, that a trend line has been hit, who are we to say this time is different? We go with probabilities. And therefore, if we come into this level here, it makes sense. It's right around 34.25, it looks like, that you should get some sort of bounce there on that drop. All right. So again, this is one I am eyeing. This one would be the one where I would actually contemplate a swing trade, because if we look at this, notice how you get like a week or two or even 3 weeks of a big bounce. I mean, here we went from 59 back to 77. Percentage-wise, that's huge. Even from here, we went from 37 all the way back to 46. Percentage-wise, that's a big bounce. Here it would be even lower. So maybe we get another 20, 30% bounce off that level. Now, turning our attention to some other name brand stocks here. Tesla, I know a lot of you guys are very interested in Tesla. Now, Tesla's kind of quieted down since that feud between Trump and Elon Musk. We have seen Tesla bounce back, but look at how it's respected this area here. Pivot low, gap fill, comes right up, rejected, hits it, rejected, hits it, rejected, and we're trading right there. So very clearly, 332-ish is resistance on this. Now, would I short that level? Heck no, because it's been hammered on too many times. Remember, folks, the methodology that I teach, and by the way, this is in the Winning Trader series, and we will be doing a 50+% discount on the Winning Trader series for Investor Empowerment Day. So again, if you've been waiting and saving up for this, this is the chance. Almost 20 hours of everything I know in this brain right here that I've learned over 26 years of trading is in that course. But the point being is that one of the points that I point out in that course is that when you hit a trend line, you hit it once, it weakens a little. Think about the door. You hit it again, it weakens more. You hit it again. Eventually, it falls over, right? Think about, again, I love the analogy of ramming into a door that's locked, right? Let's say, you ran outside, you locked yourself out of the house is on fire, your dog is inside. You're like, dude, I am going to save my dog or my cat or whatever it is. And so you say, all right, I got to bust down this door. You ram it with all your force. Most of us probably don't break it down in the first hit. Okay, that's a support trend line. That's keeping price and causing a bounce. You kind of hit it and you bounce back, right? So think about that. It kind of slams you back and you jump back. You hit it 3 times or 4 times, it probably breaks. Okay, and so the thought process there can be applied to trading technical charts. And in this situation, this is why, again, we've hit this line multiple times. If it goes back there today, I'm not shorting because it could easily break through. And if it does, it goes to 367. Now, if it continues to fall, where is support? Right down here at 272. So again, very defined technical levels on Tesla in the near term. AMD, I'm highlighting AMD not because it's up a lot, but because this one's really playing catch up to a lot of the other semiconductor chip players. And this had a great day yesterday. It's up again today, but it is getting close to some technical levels. See this area right here, folks? Right through here, 134. See this pivot low, pivot low, pivot low. And then there's a gap fill right here at 138. This right here should be massive resistance for AMD. So if AMD rallies today up into this level, likely we start to see a day or two of rejection, maybe even a multi-day pullback off of that level there. Very cool stuff, guys. All right. But again, chip stocks have remained strong. They were strong yesterday. They were weaker early. Now they're fighting back. NVIDIA, last I checked, was basically around the flat line. AMD is pushing up a little bit. So again, those chip stocks remain in play and generally strong. Next up, let's look at Bitcoin, see how Bitcoin is doing. Bitcoin is coming back in. Remember, I had these 2 lines that I put on yesterday in the game plan. They basically create a support area, which is a lower support of a wedge pattern. All right, here's your top of your wedge pattern. And by the way, why is this called a wedge pattern? Because the lines are inclining here, and this is inclining too, but notice how these lines are getting closer and closer and closer together, essentially wedging price between them. And so what this works is, it works like a pressure cooker. Essentially, it squeezes price, and then you break, and either you break to the downside, and we probably go straight down here, or you break to the upside, and you go to 120,000. And so you watch to see which way it breaks, and whichever way it breaks, you get that bigger move. Bitcoin, again, is pulling back today. And by the way, this is starting to look a little bearish. Do you guys see this? So again, if we look at Bitcoin, this is your down move. And then this is your inside bar bearish pattern of consolidation. So I've said before that I still think the stock market is due for a pullback of 5 or 10%. And if that happens, it's likely Bitcoin would pull back as well. And I could see Bitcoin going down to this 95 to 93,000 area here. Again, that's for Bitcoin. That's a run of your mill pullback. It's nothing major on Bitcoin. Gold today, let's take a look. Gold is flat on the day. Yesterday, it did pull back again as we saw de-risking. Or I shouldn't say de-risking. It was re-risking. So remember, if you're looking for a safe haven, gold is your place. So yesterday, markets were rallying higher. It was risk on. So risk on means sell gold and buy stocks, or in this case, that's exactly what we saw, and even Bitcoin to some extent. Today, it's a little bit more iffy, right, because of Trump's Truth Social post about, Tehran evacuation. They should evacuate. Again, does that tell us that it's going to escalate there? And gold is inching up just a little bit on the back of that. Now, silver was in a bullish wedge pattern. And look at this, guys. Remember yesterday, this is what I had on the chart for you guys. I had this pattern, and lo and behold, look at what's starting to happen. That's case in point. technical analysis 101, recognize those patterns. Now, for me, I did a risk reward assessment. And for me, I said, oh, listen, if it continues to consolidate and pulls back into here, I would buy it. Here, I'm not buying it again. I had it. I made great money. We unloaded it right up here. That's fine. I don't mind missing additional moves because there's always another trading opportunity. Speaking of other trading opportunities, URA, does anyone know what this candle formation is called here? This would be called a topping tail. It's a bearish reversal signal on uranium, the Uranium Global X Uranium ETF. That is a bearish reversal signal. We are due for now a pullback on the URA. Oil, let's take a look at oil real quick. Oil bouncing up again. Obviously, Trump's Truth Social post pushing oil up. But notice how oil is not spiking back up here. I actually am a believer that oil topped out here on that news. And eventually, I think it's coming back in here and eventually even down here. But it is getting a little bit of a bid today. And then lastly, natural gas real quick here, guys. Nat gas is pushing up. But again, we have an intra wedge channel here. This would be a parallel channel. And you can see it's coming right up here. It doesn't mean it can't break above that, but it's just, I guess my point of putting this little mini channel in is just to show you that the price of natural gas has been very tightly kind of just chopping up and down and sideways for a period of time. So we'll have to watch and see where that ultimately goes. But again, suffice it to say, the markets continue to kind of hinge on Truth Social / tweets. We are looking to see if we get any new trade deals in the next couple of days. There was a trade deal that was finalized with the UK, but we kind of knew about that already. And notice how that the markets didn't react to that at all. So retail sales today were weaker. The consumer continues to weaken, struggle a little bit more. I mean, I know many of us out there are struggling as well. So it kind of makes sense that the data is weakening. And then we want to watch, you guys know what? The Federal Reserve Wednesday. Tomorrow at 2 p.m., they'll release their statement. And then we have the press conference. And to be fair, I highly doubt we'll see a major move in the markets until we get that. The only thing that would change is if we saw major escalation in the Middle East, then obviously markets would react. But aside from that, everyone's watching the Fed. What is the Fed going to do? They're not going to raise rates or lower rates, but what's the commentary? Where do they guide the markets on their next interest rate move? All right, guys. So on that note, as always, I'm going to bid you farewell. Thank you guys so much for tuning into these game plans. You guys mean the world to me and you support me. So I'll do my best to make sure I give you guys all the best knowledge that I have in this brain of mine. You guys have a good one. All right. I'll talk to you soon. Take care.